Creamer Media's Mining Weekly is speaking to Kobus Lutz, the CEO of Pan-African Resources, a gold mining company with surface and underground operations in Evander and Barberton. Pan-African reported 68% higher record profit, close to 75 million in its financial year ending June 30, and is recommending a record dividend declaration. Kobus, I've been noticing that several independent analysts have been waxing lyrical about Pan-African and talking about your stock potentially not just doubling in value, but more than doubling in value. What are the hard facts and figures that are giving rise to these far-reaching share price projections by normally difficult to please analysts?
Yeah, Martin. So as you point out, certainly the year that's passed, which is the financial year in June 21, was a record for Pan-African in terms of profits. And also, as you said, we're recommending a record dividend for approval at our upcoming AGM. From a production perspective, it is also our second best year in terms of production. What it certainly has assisted us in recent years is Elikhulu, which is our low-cost tailings retreatment operation at Evander. So, the contribution to that plant helps us to also reduce our all-in sustaining costs of production. So I think in terms of the overall cost of production, it was also a good result. So yes, overall it was a good year, and production guidance was initially 190,000 ounces. We then upped it to 195,000 ounces, and ultimately we delivered over 200,000 ounces. Our guidance for the year ahead is a minimum of 195,000 ounces. So pretty much very similar to what we did in FY21. So yes, that means assuming the gold price remains cooperative, that we'll again have a great year from a financial perspective. Also, quite importantly, is the contribution from the Evander 8-shaft operation, specifically the pillar. So in the first half of the financial year, we had some difficulties that we sort of flagged to the market, but in the second half, the team really redeemed themselves. And, we're looking forward to a great contribution from that pillar project or operation also in the upcoming financial year.
What has Pan-African got in store on the near-term growth front?
Yeah, also the good thing in terms of, let's call it up, sort of current sort of circa 200,000 ounces of production, that's very stable and shareholders can bank on that level of production. Then internally, we have some very attractive growth. And as I sort of discussed, the pillar project, we're doing about, say, 40,000 ounces a year. We managed to extend the life of that project to 5 years by including 24 level. And then, we're going to do 25, 26 level or the Egoli project at Evander. So that's internal growth that can sort of take production from the underground complex at Evander from, say 35, 40,000 ounces to pretty much doubling. So I think that's quite attractive. And then at Barberton, we developing into the Royal Sheba ore body, lower grade for Barberton, but mechanized, low cost. So, that's going to be a substitute for the BTRP at Barberton, but I also see some upside as far as that project is concerned. So that's internally what we have in store. And then, as we've again flagged to the market, is we're busy with a definitive feasibility now on the Mintails project. That's another potential tailings operation. The results of the pre-feasibility study were actually very encouraging. So in the next months, we would hope to complete the definitive study and make a call on proceeding. And if we do proceed, that's another 50,000 ounces of production, very similar to what we're doing at Elikhulu.
And what is the sort of optimum that can be expected from Pan-African on the lower cost front and related renewable energy fronts?
Well, on lower cost, our guidance for the year ahead is all-in sustaining cost of production of below $1,200. I think there's some room to actually improve on that. So, in the global context, that's fairly ballpark. But, sort of 80% of our portfolio produces at circa $1,100 or $1,150. So that's very attractive on the cost side. And then talking about cost reductions, sustainability and renewables, we in the process of also commissioning our first 10 megawatt solar plant at Elikhulu. So that'll be done before the end of this calendar year in terms of construction. And then hopefully tied to the grid very soon thereafter. So that's 10 megawatts. That's going to reduce the cost of production for Evander even further. The planning for Pan-African is to actually expand that solar footprint quite materially in the next years. So busy completing a bankable study at Barberton for 10 megawatts, and then also a study to potentially extend the Evander plant by some 15 megawatts. So effectively 10 megawatts will be done in the next 6 months or so. And then every prospect in the next 24 months of actually doing another 25 odd megawatts. So, that'll take us to over 35 megawatts of renewable energy in the group.
How much more surface mining potential does Pan-African see within South Africa?
Well, to be fair, I think most of the large resources are spoken for. And that's why Mintails to us is potentially an attractive option. It's a game we know well. We're very comfortable with that level of operation. Sort of 800,000 tons is what we're speccing the plant at. Grades are a little bit higher, recovery is a bit higher than what we're seeing at Evander in terms of the test work we're doing. So that's 50,000 ounces for a minimum of 11, 12 years. That's attractive in our book. But unfortunately, these sort of opportunities are few and far between.
And when will you have news on whether Pan-African will be proceeding with the Mintails transaction?
So, Martin, that news we'll be able to confirm that hopefully before the end of this calendar year, and if not, then quite early in the new year. The good thing with these sort of projects is that, once we make a call, you can sort of have them up and running in about 24 months.
And what exploration opportunities, if any, are there outside South Africa that you're looking at closely?
Well, I mean, we're certainly focusing on our own portfolio, and I mean, we have a massive resource base already, more than 30 million ounces in resource.
And what else needs to be communicated at this point in time?
Martin, I think from a safety perspective, we had a good year. We continue to work at safety, so it's a very good safety performance. Unfortunately, we had sort of one incident at the beginning of the year, one fatality. So we're working very hard towards the goal of zero harm. So that's critically important for Pan-African. And then also, I think on the ESG front, we're very proud of the work we're doing from an ESG perspective. Infrastructure development, so busy with 2 schools for our communities. We handed over a clinic in Barberton that can look after 120 people in July. We mentioned the renewables focus of the group, and even from a water perspective, we constructing a water retreatment plant that will pretty much eliminate the use of potable water at Evander. And then also the press has spoken quite a bit about our beyond compliance initiatives, where we sort of simply do projects to benefit and sustain our local communities. And, an example is this large scale blueberry project that we've commissioned at Barberton that will create sort of 400 seasonal jobs a year, with every prospect to actually expand that to 2 or 3 times the size in the years ahead. So, ESG is also critically important for us in our business.
That was Creamer Media's Mining Weekly, speaking to Cobus Loots, the CEO of Pan-African Resources.